Hey everyone, I'm Sean Engmann with today's real estate tip of the day. Today we're going to talk about getting your finances ready to buy a home. This is one of the most important steps in the home buying process, and I'm here to help you get started on the right foot. Before you even start looking at homes, it's crucial to make sure your finances are in order. Lenders will need to see a clear picture of your financial situation when you apply for a mortgage, so gathering the right documents is key. You'll need things like recent pay stubs, tax returns, bank statements, and details about any debts that you have, like car loans or credit cards. If you're self-employed, you might also need profit and loss statements or bank statements showing your income. One of the most important steps in preparing your finances is creating a budget that you can comfortably live by. Start by figuring out how much of a monthly payment you can afford. Don't forget to include property taxes and homeowners insurance in your calculations. Property taxes here in California are typically around 1.25% of the home's purchase price, and homeowners insurance will vary based on the value of your home and other factors. All these costs add up, so it's crucial to be realistic about what you can handle each month. Remember, a good saying is that you live in the monthly payments, not in the price of the home. So sticking to your budget is key. You've probably heard the term house poor. This happens when most of your income goes towards your house payment, leaving little room for other expenses or savings. It's something you want to avoid. So setting a clear, realistic budget up front is essential, as is shopping within your budget. Now, let's discuss how lenders decide if you qualify for a loan. They mainly look at your debt-to-income ratio, or DTI. This ratio measures how much of your income goes towards paying off debt each month. To calculate your DTI, lenders add up all of your monthly debt expenses, things like car loans, student loans, and credit card bills, plus the expected mortgage payment, and then compare that to your total gross monthly income, what you earn before taxes. Income can be calculated in different ways depending on your situation. For W-2 employees, lenders typically review your full documentation like pay stubs and tax returns. If you're self-employed, lenders might use alternative documentation like bank statements and profit and loss statements or assets. Full documentation usually gets you better rates because it gives the lender a clearer picture of their financial situation. However, if you are self-employed or have a more complex financial situation, alternative documentation might be a better fit, even if it means a slightly higher rate, because it can be more flexible and reflect your income more accurately. Next, let's talk about the basics of home loans and how they work, and what you can expect when talking to a lender. First, you'll need a down payment, plus a loan, if you're not paying cash for the home. The size of your down payment impacts your loan-to-value ratio, or LTV. This ratio compares the amount you're borrowing to the value of the home. For example, with a VA loan, you can finance the entire purchase, or 100% of the home's value, without needing a down payment. With other types of loans, you can put down as little as 3%. However, the more you put down, the better your LTV ratio will be, which usually means a lower interest rate and fewer conditions to meet. Larger down payments can save you money in the long run with lower monthly payments and less hassle. Once you've got a handle on your finances, it's time to start gathering your documents for your mortgage application. When you're ready, you'll hear terms like pre-qualification, pre-approval, and underwritten pre-approval. Here's what they mean. Pre-qualification is a basic estimate of what you might be able to borrow based on some initial information that you provide. It's a good starting point, but it doesn't carry much weight with sellers. It gives you a general idea of what price homes you can start looking at without too much hassle. Pre-approval is a more detailed review of your finances and gives you a stronger position when making an offer. It shows sellers that you're serious and likely to get a loan. With a pre-approval letter, you know exactly what you can afford and are ready to make an offer. Underwritten pre-approval is the strongest option It means that the lender has already reviewed most of your documentation and you're essentially approved for the loan pending the final property details. This can make your offer almost as strong as cash in the eyes of the seller. Regardless of what you qualify for, I want to emphasize again the importance of sticking to the budget you can comfortably live with. Just because a lender is willing to lend you a certain amount of money doesn't mean that you should borrow the maximum. You also need to budget for closing costs, which are the fees and expenses you'll pay to finalize the whole purchase. These can include things like lender fees, title insurance, prepaid expenses, property taxes and homeowners insurance, and realtor commissions, and they can eat away at your available cash if you're not careful with them. In addition to closing costs, lenders may have reserve requirements, meaning you'll need to have some money left over after the purchase, typically enough to cover a few months of mortgage payments. Also be aware that certain conditions could add to your costs, like needing to pay off credit cards in full before closing. Here's a critical tip. Once you're in the process of buying a home, avoid making large purchases or taking on new debt until after the deal closes. This includes buying new furniture, a car, or anything else that could affect your credit or debt-to-income ratio. Big purchases can jeopardize your loan approval, especially if they change your financial situation right before closing. Wait until after you have the keys to do them. Preparing your finances is a big part of buying a home, but with the right steps, you can set yourself up for success. If you have any questions or need help getting started, just drop a comment below or reach out directly. My contact info is down in the description. If you'd like to learn more about how I can help you buy a home, you can book a call with me down there as well. Thanks so much for watching. Don't forget to like, comment, and subscribe, and I'll see you in the next video.